and welcome everyone to this webinar today. We appreciate you attending, and today's topic is on rural small business funding, loans and grants. Always a popular topic of interest to folks, in the getting into the small business realm or just trying to grow the business. So for whatever the reason is, funding's always of interest because it takes money to make money. And rural small business funding is a little different than some other aspects of funding. So we wanted to talk about it through that lens. Uh, all funding, for the most part, is very, very similar. How banks and funders go about underwriting a loan or even a grant, because they look for certain elements in the business entity and the business project. So some of those will be, very similar, but we'll try to outline the nuances. So again, I'm Jim Johnson with the Small Business Development Center. I work out of the University of South Carolina, but SBDCs are located all across the state of South Carolina. We in a consortium of universities host the program, which would be Clemson, Winthrop, South Carolina State, and University of South Carolina. And so we have about 20 locations, 50 consultants. So someone there to serve you with free business consulting, no charge again, and confidential. So that's what the SBDC does. We're an SBA resource partner, and we're there just to help you get started, to grow, whatever your goals are. We're there to be a sounding board, to connect you with other folks, educate, however we can be of assistance. I was personally in business for probably 20 years. Actually, I still am. I have a small business. Still, it's property management business. So I always knew how important it was to have folks to confide in and just to talk things out, and help. So great service provided by SBDC. Today we have, as Carolyn mentioned, we have a pretty packed agenda with several speakers. I'm going to start it out, and we'll have Kate Polsha from the Climb Fund, a lender, talk, and then we got Rick Vanderweel with the SSBCI program, which you'll learn more about, and Jim Madson's gonna be the cleanup hitter with grants, which is everybody's favorite topic. So we'll clarify some things about grants, right? So I'll jump right into some top rural challenges. I always like to throw out there in the beginning to give people perspective. And typically I have more statistics than this, but this webinar is only about an hour, so there's only so much I can put out there. And for this audience, y'all are most likely from a rural area or have a business in a rural area. So these are not going to come as a surprise to you, these statistics. Some of the greatest challenges of doing business in rural areas, taxes being number one. And the reasoning behind taxes kind of being a burden on rural business, rural counties don't have the tax base that more urban counties have, which means they don't have these big taxpayers. Like they don't have wealthy neighborhoods with, a lot of fancy houses. They don't have as much industry. They don't have as much, land that is taxed at higher values, right? They probably have more farms than normal, and farms are actually taxed at a lower tax rate, right? So they get exemptions. So all that equates to some rural counties just, don't have a tax. So they then have to spread the tax burden of operating the government to taxpayers that they have, which are small businesses and residents. And so that ends up being like higher taxes that you pay in property taxes a lot of times in rural counties. So that's always a burden. And in some of these rural counties and cities try to, leverage small business to collect fees as well. Lack of customers is another big issue. When you're in a rural area, you just don't have the customer types of business models. So that can cause you to struggle. So if you have like a retail model, and it's just a brick and mortar servicing that geographical region may be tougher than if you can, grab customers from like more urban areas where you have bigger population bases to, sell from. So those lack of customers make it real tough for retail, the retail model. And there's other models, that it make it tough for. But on the converse side of that, there are models that do better with fewer people around, farms being one of them, of course. Unless you're a direct to consumer farm, then being somewhat close to an urban market might help a little bit. And I'll just mention one more of these is healthcare costs. Usually the theme in rural issues or challenges is around access because rural areas don't have the accessibility to the same amenities and services that like a more urban area would have, such as healthcare, access to healthcare, access to high-speed internet, access to education opportunities. So a lot of these same themes of access, come about in rural areas, which can be challenges for small business. Uh, and that's what you have to consider when you're designing your business model, a successful business model coming out of a rural area. And that is also what a funder would, part of what they look at is your business plan and the business model and how you either are going to make money or if you're intending to grow, how are you growing and how are you going to use that money to grow. So business financing is basically getting money to grow, operate, and or start your business. So it can be any of those three. Uh, business, some concepts here. There's a couple different type of ways to finance a company. One is through equity, and another is through debt. And equity is basically direct investment into your company and ownership in the company. So most folks, just open a sole proprietorship. They're just a single owner, a sole member, and they put the money into this, starting this from their savings, from their own cash, right? But let's just say you went out and found a partner who's going to be 50-50, right? You're going to put in 50% of the cash and they're going to put in 50%. That would be an equity partner, right? So they would put equity into the business. Versus debt is that you borrow money from a lender or from a third party, and then you have to repay that. And there's a fee associated, there's a cost associated with that. So then you have another concept in financing is working capital versus financing of fixed assets. Typically speaking, fixed assets are when you buy stuff like equipment, buildings, uh, supplies, those type of things. Or well, actually not supplies, but equipment and building mostly. And then working capital is used more for operational expenses, maybe some supplies, inventory, and things like that. So there's different ways that you spend money, which would impact how you finance whatever the project is, right? So what are some do's and don'ts for small business financing? Well, I would say one do is to invest your own money, and most funders are going to want to see that. They're going to want to see an investment, from the borrower into the project. And when you've been in business for a while, you've already put a lot of equity and a lot of your own money and sweat equity into it, which could, at times be accounted for. Also, earn the right to borrow. So what that means is basically a lot of lenders want to see experience and time put into the business and returns that were made from the business, that you were able to run a profitable business. So then you can show that to the lender that you're able to pay debt. And that leads us to the next, show profitability. And the reason that's a good do is because the lender wants to see that you can pay, a debt out of the profit of the business, right? Without negatively impacting the business. Understand and keep working capital on hand. It's important to have, cash in the bank. Cash is king, and cash flow is king too, because, if your cash runs out and you have bills coming in and you have to wait, for cash, then it could put you in a bind. And sometimes you might have to float payments between different, debts, which is not a great position to be in. So you want to have cash on hand. be lean on fixed assets. Uh, a good example of that is in agriculture. A lot of people like to go out and buy a tractor, off the bat. And they could spend 25, 30,000, as much money as you want, trust me, on a tractor. And that's a big fixed asset. But the problem with the buying like a $30,000 tractor, if you finance it and you come up with like a, seven, $800 payment per month, you already got yourself in the whole $800 per month. So you need to make sales just to cover that 800, right? So, any fixed asset you're gonna have to pay for. Um, and it's going to make your break even higher. So just, run as lean as you can with, without fixed assets. Sometimes it's, you can't get around it. You got to buy some of these big pieces of equipment or property or whatnot. So anyway, match sources and uses of funds. Um, that goes on real estate, borrow, based on a real estate transaction. If you're buying like, or if you need money for working capital, like more short-term needs, borrow for short-term needs. You don't want to put like, you don't want to borrow on a 30-year loan for working capital, that you only needed for like a 5-year term or something like that. So anyway, you just want to make sure you match things up there. Also understand your financial statements. You need to be really diligent about understanding what a profit and loss statement is, and a balance sheet, and statement of cash flows. What's your cash flow like? Uh, those things, this is the language of bankers and funders. They understand things in numbers and financial statements. So for you to understand and for you to go ask for money, you need to be able to understand these things. Understand collateral options. When you borrow money, sometimes a bank will give you money what they call unsecured. So, they don't ask for any collateral in return. Um, and usually it's probably going to be a short-term, higher rate type of loan, more expensive. A lot of as you ask for more money, they're going to ask for collateral, which basically means that if you, for whatever reason, default on the loan, they have a collateral, they have a lien on your collateral, so they can go out and sell that and make themselves whole, get their money back, right? That's what collateral is. So just understand that and understand what your options are around that. Understand the risk and cost for loan types. Just as I mentioned, rates can be different for different type of loans. Terms like the length of the loan from 7 to 10 to 25 years can be different. Just understand those, and we'll talk a little bit more about those as we go. No grants. I mean, typically what I say for startups is there's not any grants. And for many businesses and industries, there's very limited amount of grants. But I won't go too much in that because Jim Matson will talk a little bit more about grants at the end. And of course, shop around, see what's out there. Because one lender says no, doesn't mean there's not a lender right down the road that wouldn't be interested. Lenders have different appetites for different projects. Lenders, they have a portfolio of loans that they have on the books, and they're regulated. And sometimes if they have too much of one type of industry, then they kind of shy away from lending. That could be a lot of reasons that they say no, right? But it could be, could be something that you need to work on as well. But shop around and see what you can find and get expert advice. It's always a good thing to do. So some steps to getting loan ready. If you're interested in obtaining a loan, um, always start with a business plan. It helps because part of a business plan is you have to put a financial projection together and understand the income and expenses and the profitability of the business, which is what a funder is really interested in. And even if you have been in business for a while and you want to get a loan to expand the business or to buy a new piece of equipment or whatever it might be, getting that having that business plan is very helpful. Knowing what you can afford is important. And that goes back to the cash flow of your business and how much profit are you making. A lot of times that can kind of measure how much you can actually afford, unless you have some other income sources coming in. Uh, take care of your credit, study your financial statements, like I just mentioned. We talked about collateral. Show your equity contribution, how much money you're going to put into this project, right? Many lenders like to see, 20% um, to be put in the project by the owner. And again, research. Common elements of the loan package. When you approach a bank, uh, you start off by filling out an application, to get a loan, or you're going to talk to a loan officer. They're gonna, talk to you a little bit about what they have to offer and try to get an understanding of what you're trying to accomplish. But then a lot of these folks are going to want a business plan. They're going to want a business financial statements if you're existing and in business. They want to see your financial statements. And it could be your tax returns. It probably will be. And in addition, if you have year-to-date financial statements and haven't filed a tax return, a lot of people haven't filed yet, maybe for 24. So they might want to say year-to-date for 2024. Personal financial statements is like a look at you personally as the owner and like all of your assets and all of your liabilities and all of your income streams, right? They want to see that whole financial picture and see what your position is. So that's what helps them make a decision to whether they think a loan is right for you at this time, right? And then personal business tax returns, which I mentioned, you'll definitely need those. And some more elements are source and amount of equity contribution. Again, if you have a project, whether that's to start the business, buy a building, buy a piece of equipment, they're going to want to see, you put in some contribution, and they also want to know where that's coming from. Uh, I mean, if it's going to impact if you say, okay, this is $100,000 project, they say, okay, we can do, you'll need to put 20,000 in, and then you go borrow that 20,000 from someone else. Well, that impacts your financial position because you just borrowed money from someone else. So understanding where that money came from is also, part of that whole picture. Credit report, you pretty good credit, to get a loan. Credit is a reflection of your history of payment, basically how you've paid in the past. Go too deep into credit reports, but it's very important, especially for unsecured type loans. Collateral, we've talked about a little bit. Management experience, this is another aspect that's important to lenders. They want to see that you've had some experience, either technical experience in the business or experience running the business, um, general experience. And if you don't have that experience, if you've never operated a business before, or you have no, like, I work with a lot of restaurants and people want to come open a restaurant and they've never worked in a restaurant before. That's kind of a weakness in the underwriting. But if you run a business, a different type of business maybe, then that strength that will give you that strength in that management experience position. But if you haven't run a business restaurant, then that's going to be a weakness, and they're going to want to know how you're going to remedy that, right? And there's different ways you can do it. You can, maybe partner with someone who has experience or contract with someone that can come in and work with you, experience, but they're looking to see they're mitigating and reducing their risk, understanding that you have some good experience because experience and wisdom generally, is a good indicator of success in the end. And then if you're purchasing anything, you're gonna need those agreements, contracts, estimates, and those type things. So let's see. We have gone into qualifying. I've talked about equities. So some financing options. We talked about equity, which is you can just put sweat equity. You put your own work into it, and sometimes people can get investments into businesses just by working there. Business credit cards can be a little expensive, higher interest rates. You can kind of get in trouble with credit cards if you don't watch out. Getting money from your family is a good way to fund a business, and crowdsourcing. Crowdsourcing is there are platforms like Kickstarter online, and you can send out, it's almost like a marketing campaign that you have to run to ask people to invest in your business or really donate to your business because it's not going to be an equity investment. It's just going to be a donation investment. So that's a way to crowdsource. And that really takes a lot of effort to do that. It's not the easiest thing in the world, but there are a lot of platforms out there that you can do to crowdsource. And I've seen some really successful Kickstarter funds and crowdsourcing funds. We also have banks and regional lending organizations. Typically we always go to a bank first. And if a bank is not interested, conventional banks are going to be your most conservative, basically. And one conventional, you might check another one. Um, and if they're not interested, there's other avenues that you can go to. And rural type of loans, you've got the USDA. If you're trying to open a farm, they have the federal government has the Farm Service Agency, which makes loans to farmers, usually new and beginning farmers, they'll do, and then farmers that have been turned down from a conventional traditional lender. So they have a lot of great products from farm ownership to operating loans. So all types of stuff at FSA. So it's a real good product. You also have rural development, which is really their BNI, business and industry guarantee, is for really big projects up to 25 million. Wouldn't really be for a small business. But USDA does have an intermediary relending program. That's for small loans, uh, like micro loans under 50,000. The Climb Fund, Community Works, and Beaufort Black Chamber all do these micro loans, and you'll hear a little bit more from the Climb Fund. Ag South is a co-lender, and a cooperative lender is a special type of lender. They look like a conventional lender. They feel like a conventional lender, but you get like at the end of the year, you may get money back from the cooperative. SBA guarantees are out there as well. An SBA guarantee is basically SBA doesn't lend money. They just guarantee money. So which means a bank may lend you money and do an SBA 7A loan. And so the SBA comes in and guarantees that loan for whatever. There might be a reason that the conventional bank wants to do SBA, like it's a startup, for instance, right? Usually that's a red flag to a conventional bank, and that's a lot of risk involved. So they want to go to SBA to help guarantee it. So if the borrower defaults on the loan, the SBA will make the bank whole. They'll pay the bank, right? So that's why you have SBA guarantees there. So if there's a deficiency somewhere in all those things that I just talked about, like is it a startup? Maybe you don't have enough collateral. Maybe you don't have enough equity injection. Maybe, so for some of these reasons, if there's kind of a weakness there, that's when the SBA come in. You also have CDFIs, Community Development Financial Institutions, like the Climb Fund, which you'll hear from shortly. And then you have other local and regional revolving loan funds. Every community, well, not every community, I take that back. Many communities have a revolving loan fund. For instance, Charleston, Berkeley, Dorchester, uh, Council of Governments has a small revolving loan, very small revolving loan fund. So, it's just you can find these little funds, but they're usually, directed towards very special purposes and just very regionally as well. So something to look out for. And SBDC consultants can help you, identify these sources, and they can help you through the loan packaging process, um, and determine if you're ready, and if you are ready, kind of what are the steps to get through to getting that loan. So now I'm going to hand it over to Kate Polcha. And Kate, I'm going to stop sharing so that you can share your presentation.
Okay. Thank you so much, Jim. And I am Kate Polcha. I am the lending manager for Climb Fund. Climb Fund is a nonprofit community development financial institution, or CDFI, and I will share my screen in just a second to share some information about us. Basically, we are a mission-based lender. We work with clients who cannot obtain traditional financing. And so what that means is that if you cannot get financing through a bank, if you have been declined financing through a bank, you would then come to us. Our mission states that we create access to capital, jobs, and opportunities where they otherwise would not exist. And as a nonprofit community development financial institution, we leverage capital to create local impact, elevate opportunity, and advance social and economic justice. I thought what I would do is share with you our website, because that would be where you would be able to get a lot of information from us. So I'm going to go ahead and share my screen. When you take a look at our website, you are going to be able to gather a tremendous amount of information from us on this site. And essentially, I'm just trying to move this so I can. If you hop on our site and you go to our Before You Apply page, this is going to be where you're going to be able to see the documentation that we are going to require from you in order for you to be able to apply for a loan with us. The thing that I want to share with you before that is we do require that you participate in a small business application workshop so that we can go through with you what documentation is required, and we can answer any questions that you may have. There is a checklist here as well for you that can share with you exactly some of the things that Jim had previously mentioned. We are going to look for your business plan. We are going to look for, a resume that includes all of the background. We want to see your projections and your business financials, a personal financial statement. Something that you should know is that any loan that is taken through Climb Fund is personally guaranteed. Obviously, we are going to require copies of all your business documentation. So all the things that you would expect, articles of organization, your operating agreement, etc. Again, I want to mention a bank declination. Let me share with you that you don't have to actually go through the process of a formal application with a lender where they run your credit. However, we do need you to provide us with some sort of written documentation. So it could be an email from the lender that you spoke with that says that your business does not qualify for traditional bank financing. That would be acceptable to us in terms of a declination. And then what will happen is that through this, as you participate in this webinar, it is offered twice a month and it is virtual. You will get a link to apply for a loan. Our loan programs, we are an SBA microlender, as Jim had mentioned. And in addition to that, we do also offer USDA loan products. So I thought I would share with you a little bit about the loan products that we offer. We offer small business microloans. Those are loans up to $50,000. You can utilize those for working capital. You can use them for equipment purchase. If you require financing that is over $50,000, we also offer small business loans. We offer real estate loans with terms up to 25 years. We offer a line of credit in specific circumstances. We also offer a USDA loan program currently. Those loans are a maximum currently of $100,000. It has a 10-year term as a max on it, except if you are purchasing real estate, in which case you could go to 25 years as a max. The loans can be to an existing business or to a startup business. and they are really tailored to certain counties within South Carolina as defined by the USDA. So there is a listing of those that I can drop into the chat at a later point. But the interest rates on the loans would be 11% for the Climb Fund small business loan product and the USDA product. That's a fixed rate. There is no prepayment penalty on those products. The SBA product, which is a microloan, has an interest rate of 7.75%. That is also a fixed rate, and there is no prepayment penalty. In terms of requirements, we do tend to have a more flexible way of underwriting and looking at your loan. So if you come to us and you perhaps have, a credit challenge, or, there are things that we can do and we can work with you in order to be able to overcome those challenges. Information about something, we understand that life happens, and sometimes, there are quirks that come up and you need assistance. Those are things that we can work with you on. In addition, I'm going to just stop sharing here. In addition, you'd be in a situation where, we offer what's called technical assistance. So as you proceed, not only, ahead of being approved, but throughout your application process, and then if you are approved and subsequently after you close, you're entitled to work with business consultants, and this is at no additional charge to you. So if you require assistance in your business with bookkeeping or accounting or marketing, these are all things that, we are able to put you in touch with someone. We have a food and beverage consultant who will come in if you own a restaurant, and they will be able to have a conversation with you to assist you and put you in touch with different vendors. So we have a tremendous amount of resources that are available to our borrowers in order to assist you in being successful as it relates to your business. The most important thing to us when we are lending is making sure, I can't tell you enough how important it is to make sure that you are separating your personal finances from your business finances. This is something that is extremely important. And from an underwriting perspective, we are taking a look. We need to see we need to see that your business, if it's an existing business, that it's able to sustain itself, and that you are able to sustain yourself on a personal level. In regards to credit issues and eligibility, the things that we're going to be concerned with, we're not necessarily focused on your credit score. You can come to me and have a 620. With that being said, if you have open charge-offs, a bankruptcy within the last 2 years, or open collection accounts with the exception of medical collection, these are things that we're going to ask you. You cannot have a bankruptcy in the last 2 years, and any collections or charge-offs, you need to resolve those or have proof that you are in a solid repayment plan with the creditor. Again, we're also going to ask you to give us an explanation as to why there was an issue. We can lend for really, again, a myriad of reasons. It can be for working capital, it can be for equipment purchase, it can be for, the purchase of real estate, it can be for the upfit of, a new restaurant. I mean, there's so many different things that we can offer you financing for. There's really not any industry per se that or type of transaction that we will not look at. So I encourage you to, reach out to us. We are based in Charleston. That is where our main office is. With that being said, we also have loan officers and offices spread about the state. We have a loan officer in Columbia. We have just opened an office in Aiken. We have a loan officer in the upstate in Greenville, and we have a loan officer in Myrtle Beach. So Our loan officers are spread out by territory, and there will definitely be someone close by to you in order to be able to assist you with your lending needs. I don't have a whole lot more to share. I think that wraps it up, and I'm happy to share contact information and answer any questions that you have at any point.
Okay. Thank you, Kate. We're gonna take questions. Y'all just put your questions down in the chat. And after everybody's presented, we'll do that question and answer at the very end. And I know you might have a lot of questions for sure, and we'll do our best to answer as many as we can within a reasonable amount of time. So with this, I'm going to hand it over to Rick Vanderweel, who works in a program called the SSBCI, and I'll let him talk a little bit more about that.
All right. Well, thank you, Jim. It's nice to be with everyone this afternoon. I am also a part of the SBDC team. We have 5 SSBCI consultants. We provide much of the same consulting services that our core program does, much like Jim, but we really focus on helping the underserved and very small businesses with less. I want to spend a few minutes talking about kind of a really unique program that's called the SSBCI Lending Program. It's a newer program that is funded by the U.S. Department of Treasury. And the really mission of this program is to help existing businesses grow and succeed throughout the entire state. It's really designed to help the underserved, if you will. And that's, again, as I mentioned, the target market is very small businesses with less than 10 employees. And then those owners and business partners that are considered to be socially, economically disadvantaged individuals, right? That really is a fancy term to address those individuals and groups of people whose access to capital has been diminished compared to the general population. Okay? $25 million of this program has been specifically targeted to help the underserved. Right? Here's just 6 examples of a wide, long list, right? Minority, Black, Hispanic, women, handicapped, folks that are disabled. As you all know, the state of South Carolina is generally considered to be a rural state, so that covers a wide range of people. Loans in this program range from $100,000 up to $20 million. And again, most of these are going to be in that $100,000 to $300,000 range. BDC, the Business Development Corporation, is based in Columbia. And they really partner with a number of banks. There are 32 participating banks and CDFIs in the state, and that list is growing. Next slide, Jim, if you would. All right. So eligible use of the proceeds. What can this program be used for, right? 3 primary purposes. One is for the purchase of owner-occupied real estate. And owner-occupied real estate is defined as the owner or the owners need to be using at least 51% of the square feet of that building. There's interim construction financing, and then a wide range of what's considered to be manufacturing or large equipment. And again, this doesn't have to be one big piece of equipment like a press brake or a CNC machine. Think about, let's say that you own if you own a cabinet shop and you want to expand your cabinet shop and you're looking for, saws and bench things, you can, that all adds up. Or if you own a medical office, if you're a dentist or a doctor, you're looking to expand your facility and you need several pieces of equipment, that would all qualify for that, right? Let me give you a real-world example. This is a project that we are currently working on with a couple in the Newberry area. They've been in business for about 4 years. They are growing. Their 2024 revenues were about $350,000 and they're profitable, right? In fact, I'll be spending a good portion of my time next week helping them on their financial projections and wrapping up the project. So you think about it this way: they're successful, they're growing, and the owner of the building that they've been leasing for the last 4 or 5 years wants to sell it. So when you think about traditional financing, $200,000 project. Bank is going to, require 20% down, which is $40,000, and the bank would borrow or lend them 160. Well, as a small business, they don't have an additional $40,000 sitting in their checking or savings account, right? They're using this money to pay for their payroll, supplies, all those sorts of things. And here's where the beauty of the SSBCI program comes in. If you look at now on the right-hand side of the screen, right here, right? Again, we have a $200,000 loan or $200,000 project. Bank again is willing to borrow up to 80% or $160,000. BDC comes into play here, and they will lend an additional $30,000 or 15%, right? The beauty of this program here is that it takes the amount of owners' equity, the amount that the owners have to put in, from 5% or $10,000, right? So that's a savings at closing of $30,000. You can still get the project done, but you save a lot of cash, and you can be very successful in this program, right? Next, again, there it goes. Okay, so what's the catch? People often wonder, okay, is this too good to be true? Well, the honest answer is there is no catch in this program. Again, it's really designed to help very small businesses grow and succeed, right? There are no additional application, closing, or transaction costs. You only have one loan, right? So it's a $190,000 loan. You're paying that to the bank on your monthly payments, then the bank will transfer BDC's portion to them, right? The interest rate is determined by the bank in their normal course of business. And BDC is subordinated to the bank, much like an SBA loan, in order to achieve the 80 to 20% loan to value ratio. Okay. Next slide, Jim. All right. So this is not for startups, right? You need to be in business at least 3 years, if not more. You need to be profitable, need to be growing. Jim listed a whole sorts of things about financial statements and business plans and financial projections. The same thing applies to this program as well, right? But again, the beauty is a 5% owner's equity versus a traditional 20% or more. You must meet the lender's minimum credit score, and Kata talked about that. Typically, it needs to be 640 or higher. Just by an example, in the state of South Carolina, the average credit score is 699, right? All owners that have a 20% or more interest into the business must provide a personal guarantee. And on the real estate side, you can go up to a 25-year loan amortization, right? Then finally, last slide, based upon information as of last fall, I apologize, I don't have any updated information over the last few months, but this program, we have closed 67 loans so far. 22% of those loans are to specifically minority-owned companies, and $16.5 million has already been used. BDC has recently received an additional tranche of funds for the U.S. Treasury to continue this program. So it's good for another 3 to 4 years at least. So with that, I will turn it over to Mr. Matson.
Hey, good morning, y'all, or good afternoon, I guess. we're gonna chat, and because I've been working on this for about 30 years, doing rural grants and loans, helping people do business plans and this up for a private firm that they own based here in Aiken. We have a staff of about 8, and this is kind of what we work on all the time. And I would say my phone rings just about every day with somebody saying, "Hey, I have a piece of property, or I have an idea. What grant can I get for startup? Or who's going to give me money to get the thing starting up?" And I'm going to say, try to change that topic a little bit to say the grant itself is not really the goal. The grant is a tool to help you get where you need to go. So does it make sense to get a grant? Does it make sense to follow up on that? Or is there something else you want to be spending your time and effort on? So what I always do is have people take a little bit of time to look at what I call a little bit of a grant SWOT analysis, which is, is it worth your effort to try to go ahead and apply for that grant? Can you, do you have a chance of winning? Is it going to be successful for you? Where do you think you are? Because when you're working on grants, they're going to take a whole lot of time, a whole lot of effort on your time with it. And what's, the one thing as a new business developer that you can never get back is your time. You can occasionally get money, you can borrow money, you can talk people into helping you do other things, but you never can get back your time. And so, time spent trying to find a grant could be time that could be better off doing something else in that process. And also, should that grant fit the direction of where my business is going? Is it going to help me? Again, it's that idea of it's a tool to get you where you're going, trying to achieve, Is it going to get you to where you want to go? Does it, can you point a straight line from how that's going to get you where you want to do? Also, is doing that grant, is the effort of doing the grant itself going to delay your business or something else you can be doing? Obviously, if you're, your building's on fire, you're probably going to be putting out the fire and not working on the grant, right? That's an extreme example, but that goes into lots of other areas of the grant. Is just that moment of what can you do with that? What happens? And think about the fact that grants themselves, although they're giving you money, they're not free. Back to the 10 softball rule, there's no such thing as a free lunch. Grants also work that way. On one grant that I work on, it's about 70 pages of paperwork on the application. However, when you sign the grant, it's about 250 pages in time signing that. And then you have about 400 pages of reporting from the lenders, because the people who are giving you the money, the grantees, want to know, is it being spent well? How's it doing? Did you spend it on the areas that that you said you were going to? Occasionally people want to put money in and say, I'm going to get a grant for A, and then they want to spend it in B. People don't like that. So you got to be, sure. Grants are often like a date. They're trying to make the people giving the grant look good while the money's going out there. So, think about that when you're applying to a grant. Does it make sense for you in that moment? That doesn't mean the grant's bad. That doesn't mean where you are is bad. But if it doesn't make sense, to get you where you're trying to head to, then, grants are probably not a good thing where you're, a good thing for you to get to. And also, just like everything else everybody's talking about, you're going to have to put cash up, or you're going to have to put skin in the game. I believe Jen already talked about that for loans, and people are surprised when they hear the same thing as happens with grants. Almost every grant is going to be asking you for some type of match. And what a match is what are you putting in the grant? And of course, people say, well, if I already had the money, I wouldn't be going for a grant in the first place. But it also could be an in-kind match where you're putting up time, you'll be putting up your inventory you're working on, or maybe it's getting people to work with you. If you can convince other people to help you and volunteer their time, or someone to help you with your bookkeeping, or to review, do these other things, as Jim talked about, those areas where you may not have as good a capacity or as good a background. If you can bring in somebody to help to support you, it works the same way in a grant. Cash match is going to be, cash on the barrel. What do you have in your checking account, retirement accounts, line of credits, loans, credit cards, or somebody else that's willing to give you money, friends, family. Can you raise your children's piggy bank? Where can you get the money from to help to make sure operations are doing the same way? And you're going to notice a lot of these things I'm talking about on the grants sound a lot like the same thing the folks were talking about on the loan side. So, it's a lot of that same effort on grants is saying, what looks best. It's sort of that, running away from the lion and the, out there in the savannah. You don't have to be the fastest person necessarily, but you can't be the slowest with the grant side. Same thing on that. Your business has to be prepared. You have to have those things in place. You have to look good. People are looking at your business. They're thinking about it as an investment in your business from a grantee side. So again, what's going to make a good investment? They want to be able to say, I knew them when. So on that grant side, it's going there. It's good that. And that being said, that comes back to that area. There aren't a whole lot of grants set for startup. Because basically with that foot race, people that have already been doing it are a better investment for grantees. So there's a few out there, but there's very few. In fact, if you look up in Google on startup grants, you're going to find one or two little things, but very quickly they're going to put you into loans. They're going to be looking at loans and loan products and other things within there. So now, that being said, I don't want to be a total negative Nelly with this process. There are some grants that work on it. So how do you win the grants? What's the great mystical secret of winning a grant? Like most other things, the secret of it is you want to be ready ahead of time. Be prepared, be there, have your information together, have your business plan together. Do your, know what your pitch is. If someone asks you what is your product and what are you doing, be willing to answer them in a sentence or two sentences max. If it takes you, I was always told by somebody, if you can't explain it in 25 words so your grandmother can understand it, you probably need to work on what it is you're doing. So it's that same thing on grants. The secret is having a clear idea, putting it out there, how you're going to be able to focus and how you're going to be able to make yourself look good, but how you're going to be able to make that grantee look good and be able to say, I knew them when, right? So with that being said, how do you find out? How do you get yourself ready for these grants? Well, there's a couple basic areas to look for some programs out there for rural grants and other things in there. Grants.gov has all the federal grants for all the programs that are out there. USDA.gov does a lot of the farm grants as far as federal sites and other things. Again, I said there were a few things out there for beginning businesses. I work on the ag side more than others. So here's some things for beginning farmers and ranchers areas to look at some grants and some programs. The Ford Foundation, believe it or not, has some grants set out there for grants. Or also, not every business is a for-profit business. If you're trying to set up a nonprofit, the Ford Foundation has some really good ideas and programs for nonprofits within there. Looking at it ahead of time, if you're looking on this, try to search on the internet and the programs for the areas that you're going to be doing. When you said those words about what you're working on, try to look at some of those programs and say, hey, here's some words, here's some keywords I'm looking at. If you're doing a composting business, look over there to see, are there things for composting and waste management? The grants that are there are often very specific. Also, don't think about other things you bring in your life. If you're a veteran, there are programs out there to help with veteran farmers. In fact, in South Carolina, there's a very active, rural and veteran farmer program and a veteran business development program that do have some grants that are specifically available for folks that have served our country. So look for those specific areas, try to figure out which ones you can fit into, and then be looking ahead of time with it often, and look for announcements of grants too. Often by the time an announcement for a grant comes out, it's almost too late to begin the application. It's not always the case, but a lot of times people that are winning have been working on them for a lot of time and been doing that background. So figure out, ahead of time, write down the date, write down areas you're looking for so you can come back to it. Also, if you already have your business plan put together, that's already that discussion point about what you want to do, what you're trying to achieve, having those financials out there that says where you're going to go, and always in a grant, be able to tell them how getting those grant funds is going to help you improve and how to make you sustainable in the longer run. Because that's what funders want to know. They don't want to just give money and have it disappear down a rabbit hole. You know, if they wanted to, they could buy boats for that, right? That's the whole story about a boat. You know, what is a boat? A hole in the, a hole in the water you pour, money into. You don't want a grant to be like that. You really want it to show how it's changing your business, how it's really changing what you're going to accomplish with that grant. That being said, I was going to pull out a few programs just to mention a few things that are out there and give you a few specifics of it. I'm going to go over about 6 or 7 different grants, value-added grants, the LFPP, the Rural Energy Grant, the SARE grants, EQIP, as well as some South Carolina specific grants. So, at least we're going to give you some specific ones to look at within there. So and then these are some of the things that are specifically to South Carolina that are South Carolina money that are out there. And you notice on the last one there, we're getting to some loans within there. So the value-added grant within there, I don't think, see which one. This is actually open currently. This grant is open and is available through April 17th of this year. So there's one that's there. It's up to $250,000 for farmers. This is a farm grant, and it's to pay for value-added activities for things like processing, making cheeses, weaving clothes, selling in local markets, selling things directly within there. But it will provide up to $250,000 of working capital. But if you're also trying to plan and figure out where you're heading, there's $75,000 there for planning in that. Again, that whole match thing is for every dollar you get from the federal government, you've got to be, matching yourself at 1-to-1. There is some time match you can put in on that. About half of that can be time. But again, if you've got less than 2 years up there, you're going to need a feasibility study. And with that, now if you're asking a small version of this at less than 50, you don't need a business plan, but you still need something close to that because you're competing against people that have it. So there's one that's out way to help you grow and move your business on the ag side. There's some energy programs that are there in the area with that can help with that. This is one I'm going to comment on. This is one that's out there, and it's a lot can be up to a large grant. It can also be a small grant for energy improvement. This is actually one that Jim has worked on a lot with that. Currently, they've ran out of money for the 75% that was under another rule, and those are ones that are being held up somewhat in the government changeover. So there are a few things happening with this program with some of the current things that are happening with the federal government. But, you can get grants up to 25% of your project cost on the front end for things. This is for any rural business that's doing energy conservation areas. It could be putting in energy efficient coolers into an area. It could be also more complicated, like putting up solar, wind, biomass for energy generation. Or it could be something as simple as just, putting in activities and new LED lighting to replace old, less efficient equipment, irrigation pumps, lots of areas, but this could be any rural business in the area. So this is a good one. This opens a few times during the year. And like I said, there's a few things that are taking place administration-wide on this, but I think that there's great parts of this for this grant. It's been around since, I believe, 2001, and both parties have tended to like that one within there. There's a much smaller one to get started for on the ag side. It's the SARE grant. This is a few-page grant. Some of these others are more complicated and can require, if you're doing a large energy grant, you may need an audit to come in on this. The SARE one is just a few pages, but it can be up to $15,000 for individuals. And if you're a co-op or working with a co-op, $20,000. So you have to be a farmer by definition, which says you have to have $1,000 of documented income from a farming operation. And this is a research investigation grant that's figuring out how to do something differently. So if you're trying to look at a different innovative way of doing something in ag, of doing some high tunnel of a particular crop, hey, can I extend the growing season by using a high tunnel for this particular grant? That's one that can be really good for this program area. So that's a good one. Another one that's called the Southern SARE with there. And then some of the South Carolina programs, and here is the Entrepreneur and Curriculum Program with that on the SARE side. The curriculum program happens in the fall. It's a 6-week course. where you're coming in there to help develop a business pitch and a business plan, or business canvas is actually what it's called with that. It's a shortened version of a business plan. But of about 15 to 20 people participate in this program every year through the Department of Agriculture. It's Zoom classes for the most part, but they develop a pitch, sort of a Shark Tank type thing. Out of those, 5 to 7 people went up to $5,000 for business startup expenses and equipment. So this one has to be an ag or an ag-related program area, and you have to go, in order to go for the $5,000, you have to be part of the curriculum program. There is an entrepreneurship program that is actually open currently. That comes out with through the end of March for a due date. So here's another one that's currently up, and that's similar. You have to have a business plan, and you can go ahead and do a pitch day for that, do a Shark Tank thing, and answer some questions, and that can win up to $25,000 for labors, equipment, and other things for your marketing activities. So there's one that, and you're only competing for these against South Carolina folks that are doing agriculture or rural programs there. So that's one that's there. Now for the entrepreneurship one, you do have to have a business plan ready to go. There's typically about 35 to 40 people apply. There's usually grants awarded for about 10 to 12 people. It varies slightly depending on funding every year. So often a good way to go that route is to work on the curriculum class and then come and develop your business plan to use for the pitch one. There are some programs that are out there on the smaller level from the Department of Ag. There's, cost share program to help with funding, so you can get reimbursement for CoolBots. If you don't know what a CoolBot is, it's a great way to use a air conditioner to help to cool produce and ag equipment with there. So if you're an especially crop grower as a farmer, that's a $750 one. And there's a cost share program for water, to be able to have your water analyzed to make sure it's healthy and that we're not making anybody sick and other things with that. So that's a good area there. And these are things that are available here in Carolina grant programs within the state. There are some money that are bigger ones. I'm just going to hit these. You can read them as well. There's money if you're doing a bigger area where you're doing a rural agricultural trade show and trying to get your word out. Some of these trade shows are regional. Some of these are even international, where they can help to pay part of the cost with it. And you will notice almost all of these grants, again, have a match within it. They're matching up to 50%, which means you're putting money that you're putting back in here. Reimbursements, and the same for the gap reimbursement for a gap fee and whatnot in it. So you're doing the same thing in it. For these programs here, for the South Carolina ones, that they are available on the ag ones on the Department of Ag, and of course these slides in the talk will be available later as well when the program is done with that. So how do you get them for the federal ones? One of the things I want to encourage you is you need to be registered. You need to get a UEI number, which comes out for the System for Award Management, called the SAM system, where again you have to have your paperwork put together, your bank statements, other things. It takes about an hour and a half to apply, because you have to match up your federal tax numbers and the amount of tax with your address, with other things in that, to be able to get in the system. But if you're thinking of trying to get one of these federal grants or federal loans, I would encourage you to get into this system now, because it's sort of a gateway step that you have to do for that. And it's it would have been a good thing to do on a rainy morning this morning, where you were stuck inside with the rain and didn't really want to go anywhere else. So it's a good time to work to get through the federal system for SAM. I will say, for the SAM and other things, there's a lot of shysters out there that are willing to take your money for doing the application. Those applications are always free. So if anybody's asking you for anything, be sure to back out of that site with that. These programs and grants are out there, loans are out there. We're in a time of change on the federal side within there. However, most of these are covered under, congressional obligations, and that at this point in time. So I think both the judges and congressional are showing that there's a lot of, interest, and people are interested in having a lot of these programs, go through. So, me personally, I see there could be a little bit of a turmoil in the short run for this, but I think, you know, a lot of these programs or similar programs are probably going to be around for the longer run. And there's my contact information. I appreciate it. And I guess we're ready for questions now, Jim.
Okay, thank you,
Post your
Jim.
contact information once more, please, if you don't mind your contact information, please.
There we go. There's Jim's contact information.
Thank you.
You're welcome. Okay, so now's time for some questions. I saw that we had a few questions in the chat that were answered. It looks like several of them were answered. There was one that just came through that said, what changes are you expecting with the review of programs the Trump administration may make when looking at efficiency, necessity, and DEI programs? Do you expect rural programs to be reduced, loans and grants? But yeah, y'all have any? You mentioned a little commentary on that, Jim, right at the end there.
Yeah, I'll let other people comment on that as well. So I'll let other people make their opinions on that. But
Yeah, I mean,
I'm sorry.
go ahead, Kate.
We may see there may be some reduction in some of the USDA funds that we get. With that being said, we will still have access to other funds that we are able to apply in these rural areas. So for us, even if some of the USDA funds that we have are not available, we have access to plenty of other funds, and they can be utilized for the same purposes at the same interest rates that I shared before.
Yeah, I was going to say, Jim Matson had mentioned that, a lot of these are congressionally funded. So those wouldn't be changed by, the change in administration necessarily. There may be a new farm bill this year. Our farm bill's been on like an extension for the last couple of years. So if, Congress can get together and make a new farm bill, then, there'd be funds that it's hard to look into the crystal ball and know exactly, what that'll look like. But for the short term, there's a lot of questions right now. So a lot of us don't know what federal funding is going to be like, so we're just kind of all standing by, waiting to see what happens. But great question. And then there was a follow-up question. Is there a site to find all of the South Carolina grant programs? I do have a grants guide that I created, and I'll email that out when Carolyn's going to email you all the slides. And then I'll send that grants guide to Carolyn as well, so she can get that to you. That's not an all-inclusive list though, because grants, it's an ever-changing landscape. There's new ones that come on, there's other ones that just never come back. You just don't know. Like this past year, we had one called RFSI, the Regional Food Infrastructure Grant, Food Systems Infrastructure Grant. And that's a one-time thing. We'll probably never see that again, right? It just came from some special federal funding, and so grants come and go. Nonprofits go out and apply for them. Universities apply for them, so they get funds, and they turn around and create like subawards out of some of these funds. So you just kind of have to have your entrepreneurial awareness and be on the lookout, for grants. Going to grants.gov, going to being subscribed to different, university publications and other publications, and just kind of, keeping your eyes peeled. But yeah, that's my best advice on that. Okay, let's see. It says I am building cabins about a mile off a main road up a mountain. Are there grants to help cover the cost of getting power run up to you, and are you or just for the solar systems?
potentially
Yeah.
a red leg.
What was that, Jim?
You potentially could be a red leg program, which is one in particular, particularly if you're using a rural electric cooperative, if they're providing energy to it. There's a program out there called the Rural Electric Loan Grant, Red Leg, which could potentially help with that, but it also depends on, like all these, it depends on the financials, the dollars, and the employment numbers you have. That's often looking for creating at least 10 jobs and a few other things with that as well.
Yeah, it's going to look at the economic impact with that particular product.
But if you're doing energy things, particularly if you're using the co-op, I would always suggest you go by and talk to them. And the same thing if you're using, you know, a commercial energy provider, go by and talk to them. Some of them do have some other programs that they have within that.
Yeah, but there is money for solar. That's where you're going to find the money is in the solar and not necessarily getting the transmission lines run. Yeah, that would be a tough one. But the REAP program does fund solar projects to generate electricity. There's kind of two projects. You can either replace or you can generate. So if it's like a new, development, then that would be generating power. Problem is if these, depending on what kind of cabins that you're putting up there, um, they only pay for programs that would supply a small business. So these couldn't be personal cabins. See these, and they don't do investment properties. Like if this was just a rental property, they wouldn't do that. Now, if it was like a cabin campground or something like that, or a host of cabins, then they might consider that. But every project is individual, so we have to look at them individually. Same thing with loans. They're like snowflakes. You got to look at each one individually. They're all different.
Yeah,
Let's
it's kind of
see.
hard to go on all the details that are needed in a 30-second answer during a webinar. So
Yep, yep. And another question, if I wanted to research putting solar panels up on some of my farmland, where would I start? I would start with your utility company because depending on what your goals are for putting up solar panels on your farmland, would, you know, create a path for you to go down. So if you want to like produce energy into net meter and sell back to the grid, you need to talk to your utility provider first and see if they even are agreeable to that, to buying it from you. They would have what you call a purchase power agreement, and they would agree to pay you a certain amount, which is a lot less than what you charge you. Um, so then you have to say, well, if it's going to cost me, 500,000 to build, this solar field, and I'm going to make this much money off of what it produces. Is that feasible? Does it make sense as a business model? Sometimes it is and sometimes it isn't. The people who are more successful in getting the grants for those are like bigger solar corporations that come in and build these big fields. Small scale solar projects just for the purposes of making money off of energy production. I don't see those funded very often. The smaller ones are usually funded when they're for offsetting your energy costs on the farm. So if you have like these big refrigeration and pivots and all these things, and you're putting solar in to kind of run all this stuff on your farm, those are great projects for REAP. And if you just happen to produce extra energy, I mean, you could sell it back. But again, you need to start with a utility to determine what their agreement policies are. And if they are not really amenable to that, then it might be at least a stopper for right now. To me, it's always like not the right time right now. Doesn't mean there won't be a better time later.
I saw there was one
Jim,
about childcare, and I think Rick asked if they were up and running, but there's also Department of Social Services does have one or two operational programs I'm familiar with for childcare, things that are up and running as well. So,
Okay.
I would look at the DSS stuff as a starting point on that.
Yeah, and I'll be glad to talk to anybody about solar projects. I work with a lot of them throughout the year. I've seen all kind, and I've gotten many of them funded through the USDA REAP program. So it's not necessarily an easy process, but if it's easy, then everybody would do it, right?